The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 19th fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely do treasure your presence here today. For those of you few that are here, you know, with everything going on up in Boston, I'm sure that most folks have their eyes glued to the television, so perhaps a lot of folks actually listening to the archive here. If you are listening, I really do treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call motivation. Motivation, folks, is a mystery. Question. Let me ask you a question. Why does one salesperson see his first prospect at 7 a.m. in the morning, and another salesperson starts to roll out of bed at maybe around 11 o'clock in the morning? It's one of life's mysteries. Maybe. How about another question? Second question. Why do 1,000 people attend a lecture, and one person walks out and says, "I'm going to change my life," and another one walks away yawning and muttering, "I've heard all this before"? You know exactly what I'm talking about. Why is it that both wouldn't be affected in the same way? Another mystery, I say. How about this? The millionaire says to 1,000 people, "I read this book and it started me on the road to wealth." How many folks do you think go out and buy that book? That's right, very few. Now, isn't that incredible? Why is it that everyone wouldn't go out and get that book? Another mystery of life, I say. My suggestion is this: walk away from the 90% who don't and instead join the 10% who do. Motivation, folks, it boils down to a cycle of 4 words, in my opinion. Write these 4 words down. Number 1, potential. Number 2, action. Number 3, results. And number 4, belief. Folks, always see your potential. When you see potential, you will take action. Now, of course, I suggest that what you do is you take massive action. And when you take massive action, you'll get results. May not be the result you want at first, but you will get results. That'll start to reinforce your belief, and therein lies the cycle. Because then you'll see more potential. Then you'll take more action, get more results, even a stronger belief, and it will continue to go on. That is the cycle, folks. Take massive action. To me, that's the secret of motivation. Let's go see these markets here. Kind of hard to talk about the markets with everything that is going on in Massachusetts, as they are on the hunt for perhaps the second and final individual that was involved with this tragedy up here at the Boston Marathon. But let's go take a look at the markets anyways. Right now we've got the Dow futures are up about 38, but with fair value, looks like the Dow will be off about 20 points. Obviously, a number of companies out with their earnings. You've got the S&P futures right now trading up 6 points out at 1540. NASDAQ futures up about 11. Russell 2000 up 5. King dollar back just slightly. kind of flat. Well, not flat really in the Japanese yen. We'll go take a look at the yen currency chart. You've got gold trading up about $13 out at 14.05. Silver up 17 cents. Light sweet crude up 22 pennies. Across the pond over in Europe right now, we've got the DAX trading up 3 points, so a flat market there. The FTSE pretty much flat as well. It's up 23 points. Over in Asia last night, whoosh, talk about Asia. You had the Hang Seng up 501 points. How about that, folks? 2 3/10% up in Asia. We'll take a look at that stock chart. The Nikkei up 96. The Hang Seng was up 49 points. That was up 2% as well. Our call-in number is 877-927-6648. So let's go take a look at these markets. Let's start out by taking a look at the intraday charts here. If you're watching us on Tiger TV, what you see on my screen are 4 quadrants. These are 4 30-minute quadrants. I've got the Dow futures in the upper left-hand corner. You see it says completed pattern. In the upper right-hand corner, it's the ES Mini. It says completed pattern. In the lower left, it's an NQ 30-minute chart. It says completed pattern. And the Russell 2000 also says completed pattern. The 30-minute charts, folks, they all have completed some patterns. I expect what we're going to see transpire here today after the market opens lower. We're actually going to see a bounce ensue here. Now, I know we've had volume off of the top. We've had light volume bounce on Tuesday, heavier volume on the on Wednesday and Thursday. We did see the S&P yesterday test its hammer candle. That level held out here. I suspect what we're going to see here is a bounce in the market, whether that actually starts today or it takes place on Monday. I suspect we'll see that and maybe even move up into May 1st, maybe even all of next week. We'll take things one step at a time. Let's go take a look at what it is that I'm looking at here in the markets. Let's go start with the Dow. We'll start with the Dow. If you're watching us on Tiger TV, what you do see is you see a butterfly pattern, basically. That butterfly pattern is a 1.272 butterfly pattern. Now, what I have turned on my charting system here is a tool that measures expansions and contractions of swing points. So as the Dow was making its low yesterday at, 4:30 in the afternoon, and this is the futures contract that we're looking at, and that was shortly after we saw the earnings release from IBM, and IBM is down. In fact, if I take a look at IBM right now, we've got IBM is trading out at 197.10. We'll go take a look at that stock chart. It's off $10, so it's going to put some real pressure in the market. We then saw a bit of a bounce. Now we're going to see a test of that area as the market opens. A test of that area, meaning we'll see a test of 14,403. We'll see if that level holds. That is a 1.272 butterfly. That is a completed pattern out here. And what we did see was price just slightly get above that candle session going into 4:30. The open of that session was 14,480. So you got, so that continuation pattern that I share with you, that continuation pattern no longer exists. So to me, that's another element in taking a look at on the short term, on the intraday basis, that we could also see a bouncer. Now, as we take a look at price moving back, if you're watching us on Tiger TV, and if you can't see it real clear on Tiger TV, do yourself a favor. Go join the Tiger's Den. You can do it for 30 days, so you can test drive that. And you'll see these charts in HD, and you'll allow me the opportunity to be able to teach you something, to be able to show you about the expansions and contractions in swing points. We can see here right now the Dow futures moving back down towards that oversold territory. Haven't gotten down there, but you can see every time that the Dow, in essence, gets down to that level, that's where you start to see a bounce take place. So the Dow here, we've got the most pressure on that in the markets right now, and that is being led by IBM here, where they're trading out at 197.20. Right now, giving me a bit of a signal that, okay, we should see a bounce here. That's what the Dow chart is saying. Let's go take a look at the Russell 2000. Always good to take a look at strength and weakness. In fact, the most important thing, in my opinion, that you can do is to always start off the day taking a look at what's going on with either the strongest index, the strongest equity, the strongest and the weakest out here. And so if we take a look at the weak link, we all know the weak link here has been the Russell 2000. And if we take a look at what the weak link is showing us, we show a hammer candle. And it's a beauty hammer candle. This is the one that came in yesterday at 10:30 in the morning. The low on that is 895.70. Now, if you take a look at the volume on that at the 10:30 time frame, you'll see 17,630 contracts. As that level was tested, it first got down there at 2:30 yesterday. That was tested with 6,400 contracts. Remember, 6,400 contracts going against 17,000 contracts. Then what do you have? A real test of that area at 3 o'clock. Only 7,600 contracts, and then you saw where the market started to move higher, which was coming into that, 3:30 in the afternoon. That was only on 83. That is a rejection of a swing point. It's also a rejection of a hammer on lighter volume. That is really the completed pattern that is out there. When I say completed pattern, we have a failure on price and volume of a very significant hammer candle out here. And, of course, what that does say, it says if you get a close below 895.70, it says you can go ahead and take Stevie's interpretation of the 30-minute chart and throw it in the trash. No, that's not really what you say. You say, in fact, what you learn as much from failure as you do. In fact, you learn more from failure than you do from success. And all that just simply means is that, okay, the bulls had identified a spot where they were going to take their positions, and they just simply have failed. So it's not the chart that failed. It's not me or you that's failed. It's just simply understanding what the bulls and the bears are doing out there. So we looked at strength. We looked at weakness. Now let's go take a look at the other two charts out here, the other patterns that have completed. Let's take a look at the NQ. We take a look at the NASDAQ futures. This had formed a butterfly sell pattern right at about right around 1 o'clock in the afternoon or so on April the 10th. You'll see a 1.414 expansion. So just in between that 1.618, 1.272, and oftentimes you will see that number pop up on the screen. What that started was an A to B equals CD down. So if we take a look at that pattern, if we start with that swing point high right around 130 or so, it looks like about 28.56, 28.57.50, somewhere right around there. That's your A point. Your B point was made right here at 5 p.m. on April the 15th. Right around there at the level of 27.78.25, then makes an orderly 0.618 retracement. All right, it looks like it's a 0.618 retracement. Let's actually go measure it. Yeah, it was between a 0.618 and 786, so it did its normal job. That was a C point. And yesterday what we had take place was the completion of a 1 to 1.272 A to B equals CD down. That price projection, 27.23.75. What happened in the marketplace? Got down to a low of 27.24. You got to love that. You want to make sure that you're using these Fibonacci expansion and contraction numbers, and then we started to see a bounce. Now, you can also see as that expansion pattern was being made, what we also saw was the market on that intraday chart certainly get into that oversold territory. So we've seen a bounce here. And that's a completed pattern. And I'm looking at the 30-minute chart. Boy, time flies. On the ES Mini, just to round this thing out as well, the ES Mini had formed that Gartley sell pattern that really took place at 4 p.m. on April 16th. That started an A to B equals CD down. That price projection was 1529.75. What did the ES Mini do yesterday? Got down to 1530.75. 877-927-6648.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to our first caller, Rich in Orlando. Rich, thanks for calling. Thanks for holding. How you doing this morning?
I'm doing wonderful, Steve. How about yourself?
Good. One of the few that's not watching the Boston ongoings here?
Oh, it's a terrible tragedy that's going on out there. You know, well, what we do is it's like overload with everything else. You know, they keep kind of telling you the same stuff over and over because everybody's waiting to see what exactly is going on. It's just a terrible situation.
No question. I tell you, pretty miraculous. I don't know, miraculous not the right word, but just simply pretty cool the way that everything, has come together here, just the way everybody just simply, pitching in. Everybody was putting their lives on the line. I mean, those are the folks that are those are the miraculous folks out there. And just how, just technology, how everything came together, just individuals, but just so much that, it's going to be it's a terrible, tragic story, but certainly pretty amazing how everything has come together so quickly, so coordinated. So in any event, you wanted to ask about the FAZ, so tell me what you're thinking of doing here, and I'll see if I can help you.
Yeah, the FAZ, has been killed here over the last number of years, last number of months because the financials have been so strong. And it seems like it's an awful lot of power coming off of the bottom. I guess my real question is does this look like it might be something of some significance, or is it just another oversold situation with the financials, and this is really going to end up being a dud?
It's a great question, and so I'll take. Are you taking a look at entering in a trade on this, or?
Yeah, and if you got if you had a pullback here because we've had some real power off the bottom here.
Yeah,
after a reverse split here a week or two ago.
I'll answer the question first if it's okay. Let's take a look at the XLF, and the XLF I think is a better tool, better ETF to make your trade decisions off of versus the FAZ. And if we take a look at the sectors inside the S&P 500, well, the XLF hasn't been the strongest sector. Without doubt, it's been the more defensive sectors, such as the consumer staples area. But the XLF, as far as the weighting structure inside the S&P, it has been one of the strongest leaders out there. And let's forget about where the XLF is compared to the 2007 highs. Let's just take a look at it really in perspective with regard to just simply off of the November 16th lows. And so we have seen some conviction inside the XLF. Now, the first time that we saw any selling was back on April the 3rd when it moved down with 88 million shares. And that 88 million shares was going into that little breakout area from the March 4th to March 5th level that only had 67 million shares. Still wasn't enough to break it down, but it was able to test that very important gap up level from March the 4th, and it finally tested it on April the 5th. With 59 million shares. Now, yesterday's move down, increased volume, 61 million shares, but still wasn't able to break through that level. And what I suspect here, if you're interested in going short the financials, what I suspect here is that you'll see a bounce. We'll see a bounce that should start to begin to take place today. Maybe it doesn't start to take place until Monday, but over the course of the next couple of days, it looks to me like this market wants to, as Tom refers to, set up maybe the B to a C of a larger A to B equals CD down. And we saw the beginning of that on Tuesday when we saw that light volume move up in the market. And then we saw, stronger volume on Wednesday and Thursday on the way down. So I suspect that's what we're really taking a look at. We'll know today, or certainly know tomorrow. Now, today's options expiration, so there should be some pretty significant volume. But over the course of the next couple of days here, we'll be able to measure the volume to really understand what it is that we're looking at as far as whether this is just simply going to be consolidating inside the XLF. So I suspect that what you will see in the XLF, if we just simply take a look at retracement possibilities, you'll see the XLF, it closed at 1783, make its way up to 1831. 1846 would probably be ideal for you because at 1846 it's your 0.786 level and also would be the test of the low of April 11th. And if the XLF moves up into that area on less than 48 million shares, then I think you've got if you're interested in going and shorting the financials, which is one of the stronger sectors inside the S&P 500, then I would say go ahead and fire away. I would suggest more so, Rich, that what you would look at has been a weaker sector on the way down, and that weaker sector has been the XLE, has been the energy sector or the technology sector. So I would say be focused on the XLE and the XLK out there as perhaps better sectors that will give you a better reward to risk on your trade. Does that help?
I appreciate it very much. Thank you, Steve.
Hey, you bet. And thanks so much for calling, Rich. Thanks so much for listening. 877-927-6648. We get back, we'll go see how these markets are going to pop or drop.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing TigerTV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 33 points right now. S&P up 5, Composite up about 8. A Russell 2000 slightly positive, up 79 cents. Google up $2.64. What a muted earnings release number, a response in the marketplace to Google. Hasn't seen that kind of muted response here for quite some time. Apple down $1.94, trading out at $3.90. Microsoft up $1.11, trading at $29.90 right now. Intel up 14 pennies. Cisco down 58 cents. Popping to the upside. We looked at this yesterday. Vertex Pharmaceuticals up 55%. That's up $29 and change. That's up over swing points overall at all-time highs. Most likely with volume. Chipotle up $15 and change. That's up nearly 5%. Celanese, sorry about that. Celanese Corp, CE, is a ticker symbol. They're up 11% this morning. That's $5 and change. Manpower, MAN, is the ticker symbol, up 9%, up almost $5. Kimberly-Clark out with earnings as well. KMB is the ticker symbol. They're up 3% this morning, $3 and change. To the downside, Intuitive Surgical. That was up, down, and all around. As Tom likes to say, yesterday after the bell, well, the down now, it's down about $11.50, off 2%. IBM The big one, we're going to take a look at IBM right now. It's off $13 and change, down 6%. So IBM gapping down this morning, gapping down and coming into the last sign of strength out here that it had, which would take you back to January 22nd. That had 7 million shares on that trading session, but really the sign of strength was the next trading session, the gap up level. That was 12.5 million shares. So far this morning, the air coming out of the tires already 3 million shares in only 6 minutes of trading. Now, what this could possibly set up here, I pointed this out yesterday, is the price area. We should be on IBM watch of 180. Let me give you the exact number here to be looking at. The number you want to be paying attention to is 188.97. That is the January 20th level. January 20, is it the 21st? Let's see here. January 20th out there, you had a move higher, a real breakout. That was with 13 million shares as well. That level has been tested once. That may be a nice area for IBM if it can get all the way back there. You know, it's at 193.50. It's been as low as 192.17. So would be no reason for it to not be able to push down into that level out there. Again, that number is 182.36. Want to make sure I gave you the right number to be paying attention to. So you're breaking you're likely going to break that February 25th level with volume. February 25th is about 3.8 million shares. Yeah, you're going to break that here before we go into the next commercial break. So IBM certainly down with volume, and let's see if it can move all the way down. Now, I don't know that it'll do it today, but what you want to be paying attention to is IBM as it moves down into that tested original breakout area. Not original, but a recent breakout area that takes you back into the early part of this year. Let's go take a look at some of these other stocks here that were out with earnings, see how they are behaving in the marketplace. How about Chipotle? Let's take a look at the food companies out here. Then we'll go over to McDonald's, MCD, Chipotle. Where are you on my charts here? So many little ones. There we go, right there. So if we take a look at Chipotle, we know that's trying to move into the last area where it swing point area, I should say, which is the September 17th time frame. That high 351.80 has not been able to tag that level here this morning, even though it has popped up. The volume up there, not anything really big. That's 1.1 million shares on September the 17th. So far today, it has done 287,000 shares. So look for that to be an area where Chipotle will give you some kind of indication as to what it may want to do, as well as today's volume. So the numbers you're looking at is 351.80. That volume, 1.1 million shares. That level was it was tested. Well, from the standpoint on April 10th, you were moving the equity was being moved into with 947,000 shares, and then 900,000 shares about April the 15th out there. You also want 1.4 million shares on April the 11th. So you saw it's trying to bust it up. It is trying to get further into the gap out here. If it can get above, if it closes above the level of 351.80, then that leaves the entire rest of the gap, and that rest of the gap could take you all the way up to the July 19th breakdown session. That low is 396.98. But first, it's got to clear an area a hurdle that has not been able to clear here recently. Let's go take a look at McDonald's. MCD is the ticker symbol. I don't think they're having a happy meal here today. This morning it is down just a bit. Let's go see what kind of volume is behind it and where it's trading to. Now, what McDonald's did try to do was to get up over its swing point. Let's go ahead and draw the volume across the bottom of the chart as well. That way we can take a look and see as price was moving above that area, whether it had any volume behind it. What I'm referring to, folks, is the swing point from January 20th. January 20th's high, 102.22. Volume of 5.6 million shares. As McDonald's got over that level, it did it on April the 12th, 5.7 million shares. So similar volume. Looks like that may now have been a false breakout. This now may be consolidating, come all the way back to the consolidation range. Now, this is a fairly large consolidation range. Let's put a black line across my screen for the bottom of that area, and could take you all the way back to November 16th. Oh, how about that? Now, that's no surprise. That level there is a price point of around $83 and a little bit of change. But first, what it's going to have to clear is a little recent sign of strength out here, which took place on March the 8th as it moved higher, gapped up with 8.3 million shares. Yesterday, you had 6 million shares. Today, so far this morning, big volume, 1.7 million shares in only 10 minutes of trading here. So McDonald's, I don't know what the numbers were. Let me see here what they actually did. What were they saying out here? So they missed the top line. No, let's see. Their Q1 profit misses, but the revenue's top. So Q1 revenues $6.61 billion versus $6.55. On the income side, $1.95 billion versus $1.965 billion. So looks like what McDonald's should at least do is get down either to 98.03 or the top of the March 7th gap up, which would be 97.16. That is where Mickey D is headed to. Let's continue taking a look at stocks here out with earnings. See how they are responding in the marketplace. So we had Chipotle, IBM, we did McDonald's. Let's take a look at something else here. Let's take a look at Honeywell. Take a look at Honeywell is gapping up. Let's go see what is behind this move here. HON is the ticker symbol as we pull this back. So Honeywell is up near its highs. It's trying to take that on again today. So Honeywell yesterday had some decent volume as it was pushing lower. 5.3 million shares, made a high with 4.3 million shares back on March the 25th. Gaps up this morning. So far it has done a million shares, so it's got some pretty decent volume, taking on the most recent swing point from April 11th that has 3.1 million shares. So it looks like Honeywell is going to make a run for the highs again. That's at 75.75. Let's go down to Miami and speak with Pat. Pat, thanks for calling. Thanks for holding. How are you this morning?
I'm great, Steve. How are you?
Excellent. Thanks so much for asking. You wanted to look at SLW. That's that Silver Wheaton?
Yes.
Tell me what you're doing and how I can help you.
Well, I have been in that stock since it was 4, and I've sold lots of calls when they got high and bought them back. So I've made some money, but now the stock has really been low. I mean, it really took a hit now the last month or two, and I wondered if it's better to continue to accumulate some or if I should. I mean, I'm still holding some, and I've done well with the stock as far as, with calls on it. But now
Yes.
I'm just wondering, I don't know if there's a change in the market or, if it's good to get out of it or just hold it or start accumulating it because it is so low, maybe it's bottomed out.
Yeah, I don't know that it has bottomed out. Now, if we just simply take a look at what it's doing here, and I'll put up the weekly chart first for you. I don't think that the gold miners, gold or silver, has found its bottom yet. And I do suspect that what we will see is we'll see it find a bottom here, perhaps coming into the middle of the month in May out here. But just to kind of let's step back and take a look at what Silver, Wheat, and SLW has done or is doing right now. And the May 18th swing point is where it is traveling inside right now. And the low of that swing point, Pat, is 22.94. It's at 23.28. Now, the volume there is 47 million shares. You gap down this week, clearly, and have already done 44 million shares. So you're pushing into that swing point with volume. I suspect after today's trading out here, yesterday's volume in this big volume as well. Yesterday's volume was 10 million shares. The day before, 12. The day before 7. So it's going to have volume on the weekly basis. And what you really want to see, if this equity here has bottomed, you want to see a test again of this same swing point for May 18th, which is 22.94. You want to see that tested on lighter volume and rejected, as opposed to what it's doing right now, which is pushing on heavier volume. So that's an area to watch. If you get it closed below, here's the problem with it, is if it closes below 22.94, the next area where this likely would move back to may not be that far down. It takes me all the way back to March of 2008, right around 1954 level. I mean, your $4 entry point, that's not in jeopardy. I don't know that I see it getting all the way back there, but there is a there is a high volume untested bar back on December 19th, 2008 out there. But right now, I'd say you take things one step at a time. And you're really in this more on a longer term basis, right?
Well, my dad got into it years ago, and so, like I said, he was just accumulating as it, when it kept rising, and then when it got into the 20s, we started with the calls, and when it was up in the 40s, we really did well with the calls. I mean, like I said, we would sell the calls, and we sell actually leaps, and then we would buy them back when the stock would come down to 20. So it was always, it was a good money making stock for us.
Sure.
But now, like I said, it's sort of leveled out, and I don't know, whether I should hold on to it or whether I should, like I said, start accumulating more of it. It isn't that I don't have a lot of it. I do, but, I think of silver is a good commodity, and I don't know whether, my dad would always say it was a good, silver was a good thing to hang on to. So, But anyway, I just didn't know.
Yeah, my dad too. When I was a kid, I had paper routes, and he took all my silver coins and gave me paper. He gave me dollar bills, so he knew what he was doing too a long time ago. Here's my recommendation, because you've been in it for such a long time, and I don't see the equity here falling apart or anything, pushing lower. Yeah, sure. What I would do is I would start, if you're looking to accumulate some more, I would wait until a couple of things take place. Number one, silver to me looks like it wants to get down to about $17. It's trading at $23.20 right now. It's oversold. Can we see a bounce here? Absolutely. We can see. We most certainly can see a bounce. But I don't believe that the push lower in silver is over. I would be, and I also don't believe that the push lower in gold is over. So I think in gold you're looking for a price point area somewhere around the 1150 to 1270. I mean, that's a pretty big range, but when you consider gold, it's really not that large of a range. And I would be looking at silver around the 17. And then I would also be taking a look at, just the miners sector in general. So it's gotten pretty beaten, and I think that the time to buy is probably when you most feel like selling. And or at least when everybody else doesn't want, they'll be writing off the miners out there, and I don't think that that's a proper trade either. So I would go ahead and sit tight, and but I wouldn't start accumulating until we've actually put in our lows in silver, and I just don't think it's now.
Okay, well, I really appreciate it. It is very insightful and helpful to me. Thank you, Steve. Have a great day.
Oh, no problem. And thank you. You have a nice day, nice weekend, and thanks so much for calling. Right now we've got the Dow. You bet. Right now we've got the Dow trading off 53 points. S&P up $1.60. Composite up 6. Let's go take a look in Apple. It's off 450 right now, and Apple is continuing to push lower. Let's go take a look at the price projection here that I've got on it. Let's go switch over to one of my other charts. We didn't look at this yesterday. Pretty amazing. We actually didn't look at it at all during the 2 hours of programming that we were doing. I did during the Tom shows yesterday. There was just too many other things going on. So right now we've got Apple trading out at 387. Right at it has made the 1-to-1 A to B equals CD. It certainly did that yesterday. Broke through it by just a bit. Volume yesterday was 23 million shares, but it's the volume the day before as it was pushing into that D point, which also had 33 million shares, so accelerated volume. Apple here wants to trade into the swing point. I'll pull this back here to the left. That way we can blow it up. It wants to really trade into the swing point of October 4th, 2011. That high is 381.80, and the low is 354.24. Happens to be, that's a trading session from October 4th. October 5th was when Steve Jobs passed away. And that's really where I consider Apple to be fairly valued, just simply because of for a number of reasons. So in any event, I would wait for, if you're looking to possibly get in on an Apple trade here, I'd wait to see that level tested. That's the October 4th level. It's 44 million shares there. It's a swing point. I think it's a significant swing point as well. And also, if you take a look at the 1-to-1.272 A to B equals CD down, that's 340.76. So that's a push below that. You'd really like to see that area get spiked and then close back up above the October 4th level. 877-927-6648. We get back from this break. We're going to go up to Atlanta to Nabil and take a look at Google. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow down 60 points right now. S&P up about 2, composite up 8. Let's go to to Atlanta, to Nabil. Nabil, thanks for calling. Thanks for holding. How you doing this morning?
Great. How about you, Steve?
Excellent. Thanks for asking. You wanted to take a look at Google. Tell me what you're doing and how I can best help you.
Well, I'm looking at for a good entry point on it right now. I'm just watching it. I don't have any position or anything like that.
You know, it's a great question. Let's take a look at what Google actually has done. If you're watching us on Tiger TV, I've got have Google going all the way back and have identified each of the earnings dates just to see if there's some kind of pattern out here inside Google. Because really, it's all about understanding the the pattern psychology of a stock. And so, if we do take a look at Google, kind of a muted move here this morning versus normal. If we go back all the way to the time period, Nabil, of October the 18th, you had 12.4 million shares, big downdraft day, and the high there was 759.42. And in yesterday's trading, it got down to a low of 761.26. Didn't actually test that area, but was certainly moving down with light volume. This morning here so far, it's done 1.5 million shares, and moving to the upside. So it's got some pretty good volume in it. And if we take a look at the earnings, the reason why I was taking a look at it was to say, hey, knowing that Google has such a volatile nature, do you have to actually catch Google's move before the earnings release, or can you wait till afterwards and actually draft it? And what I mean by that, if you take a look at the October 18th move down, you could have gone short. Now, you would have had to take a look at other patterns and volume analysis to understand when to go ahead and exit the trade. Likewise, the last earnings release, which was on January 22nd, you did not necessarily, even though it gapped up, you did not necessarily have to have been in the equity on January 22nd. You would have been just fine on January 23rd as well. Now, we also were in a market that was moving higher. So I'll answer the question like this. I believe that we're seeing a change in trend in the marketplace. That doesn't mean that I don't believe that the market could bounce and could bounce into even the highs. It could go as high as the highs that we've put in and test once more the 1576.09 level inside the S&P 500. So, with the movement today, if you wanted to take a long position now, what you would want to do, in my opinion, is you'd want to go ahead and stop out of your trade if there was a close below yesterday's low, which is 761.26. And then I think you've got to take a look at timing this and take a look at volume as this and the market bounces. It may not be today that the market bounces. It could all start on Monday. But right now, it looks to me like that's what the market wants to do. But I need to reserve my option to change my opinion as we get into more of the trading session today. But that's what it looks like to me, and so that's where I think, if you think it's the right risk-reward, then fire away.
Okay. Thank you so much, sir.
Hey, you bet, and thanks so much for listening. Have yourself a great weekend.
You too.
You bet. Let's go take a look at the yen here. We don't have much time left in the show. I did mention as we were opening, the yen was really the currency that was moving the most this morning. We could see the yen here had formed that three drive to a top pattern. That completed really back on April 10th, April the 11th out here. The yen, really only doing a retracement. Let's go check out that retracement off of the swing point low from April the 2nd. And what it did is just shy of a 0.618 retracement. Of course, in the case of the yen, that's pretty deep. The three-drive pattern is still in effect here, but looks like the yen is going to make another run for the highs of $99.93. Folks, thanks so much for being here. I want you to have just simply a fantastic weekend. And always remember, you have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great weekend, folks. Look forward to seeing you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.